Hello, awesome people. Welcome to VP's Wealth Radio Show. This is Vijay Prakash, author of Amazon #1 best-selling book, Slumdog Investor. So today being Thursday, we are going to take lessons on stock market. So I've already been covering lessons on every Thursday on a stock market. So we have covered the stories on investing. I've covered the basics of how a company is formed, how shares are being allotted. I have covered the basics of stock market. So there are a lot of free learnings coming your way, and in the same journey, I am going to start today. Secrets of Candlestick Pattern. It is going to be a multiple episode series, and watch this space every Thursday more if you are somebody who is interested to learn about the stock market, because I believe in order to grow the money and in order to beat the inflation, the only option we have is the stock market. So let's get started. So before we get into the candlestick and understand the candlestick pattern, there are certain type of charts which you need to understand. Okay, I would assume if you are somebody who is interested in stock market, you have some kind of a chart reading tool, and if you don't have, I would recommend there are free tools such as a Chart Nexus. You can use Chart Inc. is a website which you can use. You can also use investing.com, where you will be able to see the charts. Okay, so the way I'm going to cover from very basic. You will be able to understand. If you're somebody who has never read chart, you will be able to understand that as well. Okay, so there are typically three types of chart, and definitely we are going to focus on a candlestick chart. But then let's take a look at which are the other charts available. So first type of chart is a line chart. Second type of chart is a bar chart, and then the third type of chart we are going to see is the candlestick chart. So the objective of building all these series and all these episodes is, what I want you to do is, I want to give you a to the point teaching. Okay, in my experience of going to multiple classes, what I have seen is, these trainers make it a very lengthy classes. You are sitting for 2-3 days, and at the end of it, what you just get is a 1 or 2 lesson. So when you are watching this space, what I can assure you, the idea is to save time and give you the quick lessons rather than spending a lot of time in building your mindset. Okay, so let's move on. So first type of chart is the line chart. So line chart is nothing but, as you can see, it's basically what we do is we plot the closing price of a stock. Okay, so every point what you see, if it's a daily chart, the daily closing point is of the price is nothing but it's a line chart. Okay, it forms the line chart. It basically helps you to identify that what kind of trend is running, right? So there are three types of trend: uptrend, downtrend, and there is something called as a sideways trend. So uptrend means stock is moving up, downtrend is stock prices are moving down, and sideways is stock is more like a range bound. So the benefit of line chart is basically you just have one point to see, and then you will get to know what trend is happening. But the challenge with this type of a chart is you are not able to know what else was happening during the daytime. Okay, so you don't know that whether stock was opened at what price. You only know stock has closed at a particular price. Then you also don't know what kind of day was that. Was that a bullish day? Was that a bearish day? Or was that a neutral day? Okay, so for that, the second type of chart what we use is called as the bar chart. Now typically what you have to remember is there are four type of prices. First is called as the open price, at which market opens, and price at which it closes, right? So the closing price is also there in the line chart. But then there is also two types of different price. One is called as a high and another is called as the low. Okay, so as you can see here, it is marked here. Now there are two types of bar chart you will see. One is green bar and another is a red bar. Okay, so green bar is when your opening is low and closing is high. Okay, and red bar is when your opening is high and closing is low, right? That means here what is happening, bulls are taking the control in green chart, and here bears are taking the control. So when price is traveling up, right, closing up, it is a green bar chart, and when it is closing down, it is a red bar chart. Okay, and open and high of course remain same. Now definitely if you look at this type of a chart, you know, the benefit is you have a better visibility. You also understand, apart from the closing price on that particular day, what happened in the market, you know, who took the control, where did the price travel, right? What was the high, what was the low? That's a benefit of the bar chart. Okay, but again, you know, we will take a look at the benefit. You know, this definitely this tells you in bit detail, but then there are some of the information which we will be able to see better if we use something called as the candlestick chart. So this is a typical bar chart. This is how it looks like, as you can see, right? This is a typical, this looks black, but if we change the color, we'll be able to identify the bar chart. Okay, let's move on. Now we are interested in candlesticks because what we are going to discuss is about the candlestick patterns. Okay, so if you see here, similar to the bar chart, this is what is called as the candlestick. Okay, so now if you see this green candle, it is also in some cases called white candle or a bullish candle, and in some of the charting software, instead of using green, they use white candle. Okay, similarly, open, close, high and low, very similar to the bar chart what you had seen, right? Again, similar to open, close. As I told you, the price, if the price is traveling up and closing up, it is going to be a green candle. If price is opening up and traveling down, it is going to be a red candle. Okay, it is also called as a black or the bearish candle, and in some of the charting software, generally people use black candle to represent. The good thing about using a white and a black is, you know, it does not affect your psychology. By human nature, you know, that these red and a green have an effect on the psychology. All the kind of a danger what you see in life, everything is being depicted in red, right? That blood color of the blood, the color of a danger, everything is being depicted in red. And in this case, everything is depicted in green. Why? Green is also a color of a green. Green is the color of nature, and green is the color of growth, right? So in order to avoid, you know, if you are somebody who doesn't have a control over the emotions, you know, it is good to use a white and a black candle, so that you will have a less effect on your psychology. Okay, that is just one idea. Okay, so this is how a candlestick looks like, you know, open, high, low, close, red and green, and the direction in which price travels. And this is the chart mostly people use for trading, right? Because this has a better visibility. In terms of a visibility, you will also learn that there are different shapes. You know, the one major challenge what we have in the bar chart is you won't be able to see the shape, okay, which you will be able to see here. So then we get into a concept called as the strength of the candle. Okay, now what you see here is the various types of candles here. Now if you take a look at this green candle, okay, what is happening here is the price opened here, okay, and then bull took the charge and established the price point here. So what happened in this case, bears were not able to take the control. So when I say bull, it is a buyers who are taking the control. When I say bears, it's a more like a sellers who are taking the control. So high and low at the same point, but it just establishes a price here. So what we can say in this case is bulls are in 100% control. Okay. Similarly, if you see here, what is happening? Price is opening here. Then bears are trying to take it down. But then again, bulls take the charge and they establish the price at the same level compared to the previous candle, right? So again, in this case, though there is a downward travel, but at the end of the day, see, every day there is a war between bulls and bear in the market. Okay. And in this case also, though shape is a little different, but bulls are able to take 100% charge and they establish the price here. Same case here, price opens here, bears try to take it down, but bulls again take the charge, again fight back and establish the price here. So if you see here, bulls are actually in 100% control in this case. That is why when you see these kind of candles, they are the strong bullish candles. Okay, they are the strong bullish candles. Similarly, if you see here, what is happening here, price opens here, bears try to take down the price, but bulls again take the charge and make a high, but then bears are able to little bit push here. Same thing here, price opens, travels down, bulls take a control, make a high, but then bears are able to little bit push. Same thing here. So what is happening in this case is there is a little bit control gained by bears here. The bear have taken a little bit of a control in this case. Okay. And that is why I would say is if I have to look at the strength of the candle, the bulls have close to 80 to 90% control, but bears also have a 10 to 20% control. In this case, it's 100% bulls who have got the control. Okay. Now, if you see here, what is happening here is, price opens, bears take the price down, bulls again makes a high, but again, bears are able to push it down. And that is why in this type of candle, if you see the power, it is more like a 50-50 or you can say 60-40, a neutral kind of a candle. Okay. And then here what happens is if you see the price opens, bulls take the price up, but bears push it down and they are able to close it here. Similarly, in this case, price opens, bulls are able to take the price up, bears are again push it down. Now, though you see this looks like a green candle and a lot of people will confuse that, it's a bullish candle, but actually it's not a bullish candle. It's a bearish candle. Okay. It's a bearish candle. So you got to watch for it. Guys, it is very, very important to understand that there is a psychology in each candle. Okay. The way you have to start thinking is, okay, this particular day, this is the shape of the candle. What exactly happened that particular day? What happened? Who was in the charge? Whether it was a bull or it was a bear. So that's why when you see this pattern, it is actually from the more bullish towards the bearishness. So we'll see again. So same thing here, it's just opposite. In this case, what is happening? Price is opening here and closing here. Price is opening here. Again, a little bit of a movement by bull, but price closes here. So it's very, very similar to what you have seen previously. Okay, it's just opposite. So here, what is happening? It is a strong bearish candle. It is 100% control by the bears. Similarly, what is happening here? It is just opposite of what I have explained you previously. Here, what is happening? Bulls are trying to take the charge. So it travels down, but again, bulls are able to little bit push and establish the price little up. So again, if I look at the strength of this is somewhere between, I would say 90, you can say 90-10 or 80-20 bearish. This is again the classic example of a neutral candle. Bears are trying to take the price down, but bulls finally establish the price here. Bears are trying to take the price down, but bulls fought back. That's why it's a neutral candle. And here, if you take a look at this type of candle, what is happening? Same thing. Price goes down, but then bulls are able to take charge here. Price goes down, but bulls are able to take a charge here. Okay. So I hope when you look at these candles, you will be able to understand that, what is happening here is we are moving towards, bullishness from the bearishness. Though this is a red candle, but what you have to understand that these candles are bullish in nature. So hope this is what I wanted to cover today, and hope this would have given you a clarity in terms of the patterns which will form, which we are going to see in detail again in our next master classes. And here you are able to identify the difference between the strength of the candle. You were able to understand why do we use a candlestick chart, what is the open, high, low, and close. And in the next master class we will again look into the detail. So this is all I wanted to cover in this masterclass. If you are somebody who has not subscribed to my channel, press the bell icon. If you are somebody who is really interested in stock market, you should be watching this space every Thursday, because there are free lectures and there are different levels of lectures which is going to come in this space. So my idea is to give you education free every Thursday, so that your trading ability goes to next level. Okay. So once again, if you have not subscribed to my channel, please subscribe, press the bell icon, and let me know that if you want me to make specific video, because this channel is for your knowledge. If you want me to make a specific video for you, just type in a comment section and I will make a specific video based on your request. Okay. So thank you so much for listening to me. This is all I wanted to teach you today. And in the next master class, we will move to the next level. So most likely this space, this series will have at least 5 videos on the candlestick pattern. So thank you so much for listening to me. And again, I will see you tomorrow. Bye-bye.